One of the most popular ways for people with significant amount of profit coming out of a real estate sale is to do a 1031 exchange. Now, this is how that process works. And yes, it is totally legal within the tax code. If you use that profit that you earned from a real estate sale to buy a like property, something of a similar use, you can then transition that money into something else without paying taxes on that income. Now, for those of you who sell real estate, you may not need a 1031 exchange. This is whenever you have significant profit beyond the level that will give you the 0% taxability. So for example, a person who is selling their primary home, up to $250,000 for a single individual and up to $500,000 in profit for married filing jointly will be 0% taxes as of recording of this video. Now, these tax laws may change as they do from time to time, and beyond that 250 or 500 mark, it's usually 15 or 20%. But for those of you who stand to make a lot more than that, and if it's not a sale of a primary residence, you're liable for a larger tax burden. So that's why a lot of people will take that and pocket it into another real estate transaction. It's a way of avoiding paying massive amounts of taxes and being able to keep that investment growing. It's a secure way of growing your money. So for example, you made $300,000 in profit. You take the whole $300,000, you put it into a property that's worth like $500,000, and now you hold on to that asset for say 3 years, and then you resell it. You've taken that $300,000 and at least gotten back $500,000. So you were able to grow it without paying taxes on it. And you want to speak with your CPAs, your tax professionals, on exactly how to document this transfer, but it is a very viable way of growing wealth in a secure manner with real estate. If you would like more information like this or to discuss this type of thing in particular, send me a text to the number on the